Hello friends, let's understand different types of derivatives markets. What are the different types of market? Why these different markets exist? And what are the similarities and differences between these types of derivatives markets? We can classify the derivatives markets taking different criteria as the basis. For example, who are the participants? Or what is the level of standardization of the products? Or are these local markets within a national boundary or they are international markets? Using level of standardization of the products as the criteria, the derivative markets can be broadly classified into two. One is over-the-counter market or OTC market. The second is the ETD or exchange traded derivatives market. Over-the-counter market is where two counterparties directly deal with each other, design the contract as per their requirements, and they execute the contracts as per stated terms and conditions. The exchange traded market is one where the exchange designs standardized products like futures and options, lists them on the exchanges, the terms and conditions of how they can be traded, how the premium can be set, how the price movement will happen, how the settlement will happen, on which date the settlement will happen, etc. is decided by the exchange and it's applicable to everybody. So OTC market is basically for non-standardized products between two specific counterparties, whereas the ETD market is available to everybody and the products are standardized. So let's understand feature by feature how these products differ. The origin of the OTC products, for example, forwards, can be traced back to thousands of years. For example, in the late 12th and 13th century, in Europe, wool was being traded as much as 20 years in advance. So forward contracts were being entered into for 20 years. The exchange markets are a recent evolution or last about 150 years when options and futures started getting traded in the US. The main players in the exchange market are retailers and institutions, whereas in the OTC market, the main players are institutions and corporates. The purpose of these two markets is fundamentally hedging. However, in the exchange traded market, there are also speculators and arbitrage who try to benefit from the price fluctuations. Most of the features are standardized in the exchange traded market. For example, the price, the underlying, the quality specifications, the delivery or cash settlement criteria, when the expiry of the contract will happen, and so on and so forth. Whereas these are very specifically custom designed between two parties when it comes to a OTC contract. The documentation requirement for exchange traded derivatives are fairly simple and they are specified by the exchange and they are standardized. In case of OTC contracts, the documentation can vary between two counterparties. However, the ISDA or International Swaps and Derivatives Association of US has laid down certain criteria, certain templates, regulations for how the OTC contract should be designed, and most parties tend to follow that specification. The trade reporting of the exchange traded derivatives happens through exchanges, whereas for the OTC in India, for example, there is a mechanism of reporting these trades. There is a Fixed Income Money Market and Derivatives Association. There is a negotiated dealing system and order management system of RBI, which is managed by CCIL or Clearing Corporation of India, and through these the trades get reported. The clearing of the exchange traded derivatives happens through the clearing houses attached to the exchanges, for example NSE clearing, BSE clearing, whereas in India most of the derivatives, OTC derivatives, get settled through CCIL or Clearing Corporation of India Limited. The ETD market or exchange traded market in India is governed by SEBI, whereas in the OTC derivative markets, RBI, the Financial Markets Division of Government of India also are partly involved. The risk in the exchange traded derivatives market is mainly the market risk or the risk of fluctuation in the prices of the underlying assets, whereas OTC derivatives also involve some additional risks such as operational risk, counterparty risk, and so on and so forth. I hope you have understood the difference between these two markets, exchange traded as well as the OTC derivatives market. It will help you identify roles and opportunities for you in these two markets and enhance your career prospects. I hope you found this video useful. If yes, please do like, Share with your friends who will find this useful, and also subscribe to my channel. Thank you very much. Cheers.